Okay, quick Friday morning radar update. So I'm just going to go through the markets this morning. We're just going to talk about the market cycle. So obviously I brought this up again. Where are we in the market cycle? Obviously I've done a couple of pieces for shares. I did one last May and I put the S&P Nasdaq sort of, the strongest market should land in the important areas last. It was the S&P actually, and then closely followed by the Nasdaq, and it was a direct hit. Literally, market gap down, touched the 10-month, and then up it went. Sorry, the 50-month, and up it went, and that was the low of that cycle, and the market has bounced. Now, more markets are still in a bear market than what have flicked bullish, and the obvious ones like the FTSE 100, stayed bullish, and other markets have basically bounced as well. The DAX and the transports being leading markets, really, what I consider leading markets, doing the same thing together is something, I say when the DAX and transports move together, I take notice. Now, I'm extremely light in the markets. So before I just move into those markets, module 1 of risk management is protect yourself from the worst case scenario, which is a bear market. And it's a little task you could probably do with your own portfolio. It would probably take you half an hour. If you'd have exited every stock, including, wherever you got involved in the bull market as well, if you would have exited every stock at what I call the last chance saloon, 52-week lows, and if you just backtest that on your account, how would it affect your P&L? I'd be very interested to know. I know from my style, the last chance saloon, 52-week lows, I don't hold anything what's under 52-week lows, So it's the reason that I end up it fully in cash. I get stopped out before there anyway. But the market, as the market unwinds and my risk model basically goes down from bull into mixed into bear, I get pulled out of the market. And I also, during this area here, I mean, someone said, when I say this area here, what I'm talking about is, the 2000 and basically the market topped, didn't it, in the American market, sort of the last quarter of 2021, and through this period, I was getting stopped out of big trades during this period. And I saw someone post on Twitter, I saw quite a few actually, say anyone who banked gains in 2022 is a liar. And I will tell you now that 2022 was a huge, year for banking gains for me. The close balance of my portfolio, and I have a system exit on every trade, the close balance of the portfolio just jumped because we were riding outlier trends. We were in some huge trends, and Ergo and WATR and CER and JLP went in 21, but they were huge gains, and others, I can't even remember now. But that exit of that system exit, the closed balance of the account, is extremely important to me because that is what the methodology delivers, and huge bank gains in that period. Now, Then as the risk model deteriorates, it's into protect the account mode because the markets start rolling over. I'll just bring the trend model up. Basically, I'm just kind of going through module one of risk management, the cornerstone protection from the market. So you get you get away with a lot in a bull market. A lot of people. It's easy to mistake skill for luck. Everything seems bad habits work is what I'm trying to say, and a lot of the things I do, people don't understand it until we actually get into a bear market and they go, that's why he does that. Because, he's been through a bear market before. I went through the tech crash, I went through the GFC. I had money running into these things. So I had money running into the tech bubble in a tech fund. So I know exactly how to adjust for these things. And I've had this in place for a long time. And trading in stocks, it can be extremely volatile. When stocks visit that 52-week low, that's usually just the dangling the toe off the edge of the cliff, and then once they go, they usually lose 50 to 90% of their value off the edge. Have a look at some of those past favorite stocks. So not popular, I know, but anyway, back to the trend model. The trend model is just last week we punched up into some of the highest areas for the trend model. I've just run this again today, so it's slightly pulled in from last week's frothy level. The trend is basically it's up on secondary trend because the primary trend of a lot of these markets is still down. So I'm interested in this pullback. Markets consolidate through time or price, so you can look at the latest share scope article to sort of see my sort of levels, what we looked at. And we'll just go through this. Transports, the 200, this purple one's the 10 month, it's right, equivalent of 200 day. And that'd be a 200 day. So it is now rising over the last 10 months. It's still a pretty short period, but that's one for the bulls. It's a pullback into a rising 200 day at the moment, and that could roll over if it goes deep. The Dow Industrials is still falling. That's one for the bears. The S&P is still falling. It's one for the bears. We've got kind of these big bear channels on the Nasdaq, and it's still falling over 10 months. I know the bottom's been called in these markets by a lot of people, but they need to do a little bit more research because this is what's the Russell is up 10% off the lows here. But we get to Europe. Europe's performing better than the US, and the DAX, it's constructive. We've got a big reverse fault. Well, we've got kind of a baseline. And it would be very normal for it to come into, it'd be very normal for the DAX to come into this level, wouldn't it? It's quite a volatile trading market. FTSE 100, obviously, we noted this one was just going sideways, and it's very normal action. And we've been talking about this for the last week or so, that mean trend is down here, and it could come all the way down here and still be very happy. We've got a big area there, and anywhere down here would be with fair game on a pullback for the FTSE 100. And obviously in the risk fountain, the FTSE 100 and the DAX and obviously the industrials being those big blue chip companies, the money flows into those first and then it rotates. And are we seeing rotation out of those markets? And if the markets can hold, we're looking for markets to hold prior levels or put a double bottom in maybe. But it would be better if they just held the mean trend area somewhere around here, wait for the strongest one to land, and they just went sideways for some time. That would be the perfect scenario, really. But it doesn't matter, 250. It's the second tier on the risk fountain in the UK, and we drew this little line last night, but this thing with mean trend is sort of fair game where it is today. Fair game even lower, to be honest. And we'll just go to the small caps. Obviously, tier number 3 of the fully listed small caps, tier number 3 of the risk fountain, and then you can go to the 8 markets, which is the bottom tier, isn't it? But you want to. It's usually how it happens. Risk starts to flow into slightly riskier and then all of a sudden micro caps are having a good day. So we're down into mean trend. It's pretty normal action. We're in a big base here on the small caps, potential base, and obviously the AIM market, lowest tier of the risk fountain, doesn't look great, does it? So that's where we are. What I will just do is I'll just bring this up again. So if we hold the lows, we're around the market cycle bottom, but obviously we don't have we can't read the future, so we don't have a crystal ball. Mine's still in the menders, and they haven't mended it yet. We haven't got a crystal ball, but we do know if the lows hold on this basket of markets, obviously it's obvious we're at the market cycle bottom, isn't it? Or potentially we're on that first retrace and we're somewhere here. Some markets are here potentially, some markets are here, but as a whole, this is all market cycle together. If we don't hold the lows, well, we go back a step, don't we? And we say, well, where are we? Are we mid bear market or late bear market stage? And if we take the lows out, the little devil on one of my shoulders is saying, to be fair, it would be great to be able to trade a market coming out of 2009 again. It would be great being able to get involved in that market again. A great reset. In reality, we don't know. We trade the right hand edge. We come at it day by day. The stock sets up and I've got risk to deploy. I will deploy risk. I've got plenty of risk to deploy at the moment, but the market model will pull in a bit on this pullback because the levels in play are so they're only just ticking up on some markets. So my risk model will be a little bit twitchy around these areas, and a hard pullback here will probably put it down to sort of 40% maybe, and taking the lows out will put it down to 0. So that's where we are. I'm really interested in a couple of bad days in the market here. I'd like to see a couple of bad days. Maybe a horrible day on Monday would be fantastic. But, I don't have a crystal ball. I have no clue what's going to happen. The reason I've enjoyed so long in the markets and is that I've got risk management in place for the worst case scenario. And, simple rules have me in near, 90% plus cash, ready to deploy. So that's the update. It's not as quick as I thought it was going to be. It's a bit longer, but it's, this is what's important to me. Playing defense, and then I'll start to, I'll knock it into first gear when I'm kind of just cruising along on tick over at the moment, looking for potential new leaders in small to mid cap sort of area. So I hope it helps.